right, listen, some of you are probably saying, Richelle, I see you posting a lot about the 401k. Why is it that you don't like the 401k? And listen, it's not necessarily that I don't like the 401k, all right? So it has its good and it has its bad, like everything else. The main thing for me with the 401k is that you have to pay too much in taxes. When you take money out of the 401k, you're going to have to pay anywhere between 22 and 37% in federal taxes, depending on your income. And then you're going to have to pay another 3 to 13.3% in state taxes, depending on where you live. And in my opinion, that is way too much in taxes. So if you're taking a look at your 401k balance right now, and it's saying $100,000, you have to subtract a minimum of 30 to as much as 50% out for taxes. When you look at it, that is not your money. That money belongs to Uncle Sam. Think about it. You have been deferring, which means putting off paying the taxes all these years. So when you go to retire, you're going to have to pay the piper, right? Robert Kiyosaki had a workshop on finances, and he said a tax refund is really a trick. Think about it. It gives you a false sense of saving money when you're really not saving your money. What happens when you get a refund? If you gave me $1 and then I held onto that dollar for 1 year and I turned around and gave it back to you, did you earn any interest on your money? No. As a matter of fact, your money decreased in value because the cost of living went up and your money didn't grow to keep up with the cost of living. So every time you do a refund and your money is held up for 1 year, you are losing buying power on your money. Your money is actually decreasing in value. Now, I know this is something we should have been taught in high school, right? The buying power of money, inflation rates, how to grow our money to stay ahead of the cost of living. These are basic things we should have been taught in high school just before it was time to get a job, but we weren't. So listen, why not the 401k? 401k, if you have one, as a financial coach, we always give this advice. Keep the matching money. That is money your employer is giving you is free money. Keep the matching. Anything that you put in over the matching needs to be diversified in something outside of your job. Why outside of your job? Because your employer owns your 401k. You don't. Your plan administrator owns your 401k. You don't own the money. So you don't have free access to the money. In the case of an emergency, you're going to have to go in there and borrow your money back from the IRS and borrow your money back from your employer. Do you understand what I'm saying? You need accessible cash. At least 3 months worth of expenses should be in the bank, accessible cash at all times. So anything over the matching money for your employer needs to be put in an account outside of your employer. That is where we come in. We have something called fixed indexed annuities and fixed index accounts. Now, what is that? Think about it. A fixed account is something with a fixed interest rate. So that when the stock market crashes, your money sits on the floor of a fixed interest rate and you don't lose a dime. But when the market goes up, your money mirrors the stock market, so you can stay ahead of the cost of living, ahead of inflation. So you're going to end up getting 6%. You can even get 10%, 14%, 2%, 3%. But it's going to always stay ahead of the cost of inflation because you get a chance to take advantage of market gains and no losses. Listen, if you have a 401k, You want to keep it? That's fine. Drop it down to the matching fund. Then get on a call with me. Let's do a 20-minute session where we can take a look at your retirement portal. Even if you don't understand what you're looking at least we can move it into things that are safe. Make sure that you have the matching funds. Make sure that you're Rothing those matching funds. What is a Roth? A Roth means you paid your taxes already. So you get the chance to grow your money tax-free and take it all out tax-free. Think about it. You get your employer's money tax-free as long as you don't lose it on the stock market. Lose it on the stock market, that takes a financial professional. You've got to be plugged into somebody who can look at the market and tell you what you're looking at. You have to have a professional. You have to learn the market. That is the only way you're not going to lose your money. So that is where I come in. As a financial professional, we can show you where to move your money so you don't lose it on the market. Capiche? So listen, 20 or 30 minutes on a Zoom call can make all the difference in your world. You can go from zero to large amounts of cash. I had a client call me. He has a thrift savings plan. He said, Richelle, I'm not 59 and a half years old, so I can't do anything. And he had, at the time, he had $600,000 in his thrift savings plan. And he said, Richelle, I looked up, and over the past 4 months, I lost $100,000. I said, well, what funds do you have? I told him what funds to switch it to. He called me back within 6 months later. He said, Richelle, my account is now up to $800,000. So how do I secure that? I said, you do this, this, and this, right? And he said, girl, you put at least $200,000 back into my pocket with as little as a 10-minute phone call. That is the power of having someone who knows what they're doing to guide you through those shark-infested waters. Are you picking up what I'm laying down? So now he'll be 59 and a half in December, and we are going to take, our goal is so that he has $1 million in his thrift savings plan. And we're going to turn that $1 million into $100,000 guaranteed cash flow for the rest of his life. It's going to be anywhere between $100,000 and $120,000 guaranteed cash flow for the rest of his life. And then we have a Rockefeller move. Once he gets it away from the government and away from his employer, we're going to show him a Rockefeller move that's going to make all that money tax-free. So you're asking me, Richelle, how do you make that money tax-free? Well, that is going to cost you 20 minutes on a Zoom call or a phone call with me. But there is a Rockefeller move that you can make where you can make your cash flow tax-free, and then you can pass it on to your children and your children's children tax-free. After working on your job for 20 years, 30 years, even if you just work for 5 years, you deserve a break today. So listen, reach out to me right here on Instagram. Send me a message, or you can email me at Rhema, R-H-E-M-A, financial coaching @gmail.com. Reach out to me, or you can go to my website, our website, Rhema, R-H-E-M-A, financialsolutions.net. You can book a call over on our website, and myself or one of our professionals will jump on with you and show you how to make your lump sum of money tax-free. I love you, and I will see you next time.